Imagine a world transformed, a world where traditional financial systems fade into the background. In their place rises a decentralized, transparent, and secure alternative, Bitcoin. This digital currency, once relegated to the fringes of the financial world, is now knocking on the door of mainstream acceptance. Could Bitcoin become the backbone of the global financial system? The answer might surprise you. The journey begins with understanding Bitcoin's inherent properties. Unlike traditional currencies controlled by governments and central banks, Bitcoin operates on a decentralized network. This network, known as the blockchain, ensures transparency and security. Transactions are recorded publicly and immutably, fostering trust and eliminating the need for intermediaries. As the world becomes increasingly digital, Bitcoin's unique features position it as a potential foundation for a new financial order. Bitcoin's price has been on a roller coaster ride, experiencing both meteoric rises and dramatic falls. Over the past decade, Bitcoin has seen its value skyrocket from just a few cents to tens of thousands of pounds, making it one of the most talked about assets in the financial world. This volatility has been both a boon and a bane for investors, creating opportunities for massive gains but also posing significant risks. Yet, through it all, a clear upward trend has emerged. Despite the frequent dips and corrections, Bitcoin's long-term trajectory has been one of growth. This resilience has bolstered the confidence of many investors who see Bitcoin as a store of value and a hedge against traditional financial systems. In March 2024, Bitcoin reached a record high of £57,658, capturing the attention of investors worldwide. This milestone was not just a fleeting moment, it was a testament to the growing acceptance and integration of Bitcoin into mainstream finance. The surge in price was accompanied by a surge in trading volume, indicating a robust interest from both retail and institutional investors. This surge is not just hype, it's driven by a confluence of factors, including increased adoption, institutional interest, and a growing belief in Bitcoin's long-term potential. Major corporations and financial institutions have started to recognize Bitcoin as a legitimate asset class, further legitimizing its role in the global economy. Companies like Tesla and Square have made significant investments in Bitcoin, while financial giants like Fidelity and BlackRock have launched Bitcoin-related products. Looking ahead, predictions for Bitcoin's future price are overwhelmingly optimistic. Analysts and experts from various sectors are forecasting substantial growth, driven by factors such as technological advancements, regulatory developments, and macroeconomic trends. The increasing scarcity of Bitcoin, due to its fixed supply, also plays a crucial role in these bullish predictions. CoinCodex, a leading cryptocurrency forecasting platform, predicts Bitcoin will reach $78,468 by October 2024. This projection is based on a comprehensive analysis of market trends, historical data, and current economic indicators. If this prediction holds true, it would mark a significant milestone in Bitcoin's journey, further solidifying its position as a premier digital asset. This represents a significant 44.17% increase from its current price. Such a rise would not only benefit current investors but also attract new participants to the market, eager to capitalize on the potential gains. The anticipated growth is seen as a reflection of Bitcoin's increasing utility and acceptance in various sectors, from finance to technology. But some experts are even bolder in their projections. They believe that Bitcoin's potential is far from being fully realized, and that the digital currency could reach unprecedented heights in the coming years. These bold predictions are often based on the assumption that Bitcoin will continue to gain traction as a global currency and a store of value. Renowned trader Peter Brandt, for example, envisions Bitcoin exceeding $90,000 to $100,000 by early 2025. Brandt's forecast is based on technical analysis and historical price patterns, which suggest that Bitcoin is poised for another major rally. His predictions have garnered attention and sparked debates among investors and analysts alike. These optimistic forecasts are fueled by several factors, including the upcoming 2024 halving event, which we'll delve into next. The halving, which reduces the reward for mining new blocks by half, is expected to decrease the supply of new Bitcoins entering the market, potentially driving up the price. Historically, halving events have been followed by significant price increases, adding to the anticipation and excitement surrounding Bitcoin's future. Every 4 years, the Bitcoin network undergoes a significant event known as the halving. This event cuts the reward that Bitcoin miners receive for verifying transactions in half. While it might seem counterintuitive, this reduction in supply is actually a bullish event for Bitcoin's price. The reason? Simple economics, supply and demand. With the halving, the rate at which new Bitcoins are created is slashed, leading to a decrease in supply. Assuming demand remains constant or, as many predict, continues to increase, this supply squeeze puts upward pressure on the price. Historically, Bitcoin halvings have preceded significant price rallies. The 2024 halving, scheduled for April, is widely anticipated to have a similar effect, potentially propelling Bitcoin's price to new all-time highs. Section 4. Embraced by institutions. A new era of adoption. Bitcoin's journey to mainstream acceptance is marked by a significant shift: the entry of institutional investors. This shift is not just a fleeting trend, but a profound transformation in the financial landscape. For years, Bitcoin was seen as a fringe asset, primarily associated with tech enthusiasts and early adopters. However, the narrative has changed dramatically. Once wary of this emerging asset class, major financial institutions are now embracing Bitcoin with open arms. This acceptance is driven by a combination of factors, including the maturation of the cryptocurrency market, increased regulatory clarity, and the growing recognition of Bitcoin's unique properties. Institutions are no longer just dipping their toes in the water, they are diving in headfirst. This institutional interest is a testament to Bitcoin's growing legitimacy and its potential to disrupt traditional finance. The involvement of these large players brings a level of credibility and stability that was previously lacking. It also signals to other investors that Bitcoin is here to stay and is a viable asset class worth considering. BlackRock, the world's largest asset manager, made headlines with its foray into the Bitcoin space. This move was not just a symbolic gesture, but a strategic decision that reflects the changing dynamics of the investment world. BlackRock's entry into the Bitcoin market has paved the way for other asset managers to follow suit. The company's decision to offer a Bitcoin ETF signaled a major turning point in institutional adoption. An ETF, or exchange-traded fund, allows investors to gain exposure to Bitcoin without having to directly purchase and store the cryptocurrency. This makes it easier for traditional investors to participate in the Bitcoin market, further driving adoption. This move, coupled with the launch of the first US Bitcoin ETF, has injected a new wave of confidence into the market. The approval of a Bitcoin ETF by regulatory authorities is a significant milestone, as it indicates a level of acceptance and oversight that was previously absent. This has led to increased interest from both retail and institutional investors. As more institutions recognize Bitcoin's potential as a store of value and a hedge against inflation, we can expect to see further investment and integration into traditional financial systems. This growing acceptance is not just about Bitcoin itself, but also about the broader implications for the financial industry. The integration of Bitcoin into traditional finance could lead to new financial products, services, and opportunities that were previously unimaginable. The era of institutional adoption is just beginning, and its impact will be felt for years to come. Section 5. Crypto goes global. A look at regional trends. In this section, we will explore how different regions around the world are embracing cryptocurrencies and the unique factors driving this adoption. Bitcoin's reach extends far beyond the borders of developed nations. It has become a global phenomenon, touching lives in every corner of the world. In fact, some of the most enthusiastic adopters of cryptocurrency are found in emerging markets. These regions are leveraging the power of digital currencies to overcome economic challenges and foster financial inclusion. The 2024 Global Crypto Adoption Index reveals fascinating regional trends, highlighting the global nature of this financial revolution. The index provides a comprehensive overview of how different regions are integrating cryptocurrencies into their economies. Central and Southern Asia and Oceania emerged as a hotbed of crypto activity, with 7 countries in the region ranking among the top 20 in terms of adoption. This region's dynamic approach to digital currencies is reshaping its financial landscape. This surge in adoption can be attributed to various factors, including limited access to traditional financial services, rampant inflation, and a desire for financial inclusion. In many of these areas, cryptocurrencies offer a viable alternative to unstable local currencies and unreliable banking systems. While lower middle-income countries have historically driven crypto adoption, 2024 has witnessed increased activity across all income brackets. This trend indicates that cryptocurrencies are becoming more mainstream and accessible to a broader audience. This widespread adoption underscores the universal appeal of cryptocurrencies as a borderless and accessible form of money. The ability to conduct transactions without the need for traditional banking infrastructure is particularly appealing in regions with limited financial services. As we continue to monitor these trends, it becomes clear that the future of finance is being shaped by the innovative use of digital currencies. From bustling urban centers to remote rural areas, the impact of cryptocurrencies is being felt worldwide, driving economic growth and fostering financial independence. Section 6. Navigating volatility. The importance of strategic investment. While Bitcoin's potential is undeniable, it's crucial to acknowledge the inherent volatility of this asset class. Bitcoin's price is known for its dramatic swings, capable of generating both substantial profits and heartbreaking losses. This volatility, while daunting to some, presents unique opportunities for savvy investors.